Welcome to my next video. In this video, we will talk about how to invest. Specifically, what's the point of investing? How good is the average person at investing? And what is hard about investing and what is easy about investing? This video is part of a 6-part series of videos on how to be a better investor. I highly recommend that before you take any actions based on this video alone, you first check out all the videos in the series. But first, what I say in this video is based upon my education, my life experiences, and my set of values. What I say is for typical people in typical situations. It is not for all people in all situations. If it was, this video would be hours or even days long. My goal and hope is that by the end of this video, you will know more about how to be a better investor and that you will be able to make better decisions for your life. What is the point of investing? If you want to accomplish many of your goals, you're going to need money. And that's where investing comes in. Investing is a way for you to grow your money so that you can accomplish more of your goals that require money. How good is the average investor? In a word, terrible. Each year there is a study called the Dalbar Quantitative Analysis of Investor Behavior that compares how well the average investor really did with the market return. For the 20 years ending in the year 2019, the average investor investing in U.S. stocks earned about 2.8% a year after inflation. I want to emphasize that that number is after inflation, and that all the numbers I'm going to give are after inflation. Another way of saying this is that if the average investor invested $1,000 20 years ago, after 20 years after inflation, that investor would have the original $1,000 and another $731. Now, how about if the average investor just invested in the market return, which is something that you can do as an investor? If they invested in the market return, they would have earned about 7.7% a year after inflation. 7.7% a year after inflation. Market return, 2.8% return average investor. Another way of saying this is that if the average investor invested in the market return and they invested $1,000 20 years ago, after inflation, they would have their original $1,000 and they would also have another $3,409. So which would you rather have for your $1,000? $731 or $3,409? So why are most of us, most of the time, such terrible investors? Well, it turns out that when most of us buy an investment, is that after it's been going up for a long time. That's when we buy it. In other words, we buy something when the price is high. Now, you'll never guess what happens to the price of that investment next. That's right. What generally happens next to the price of that investment is it goes down for a while. And what do most of us most of the time do when that happens? We sell. Now, you can make an argument that if it was good to buy it when the price was high, it's even better to buy it when the price is low. But that's not what most of us do. What most of us do is sell. So, what have we done? We bought high and we sold low. That is not a good way to make money. But we're not done yet. we still have the money from the sale. So what kind of investment do we buy with that money? That's right. We go out and we find another investment where the price has been going up, 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 up for a while, and we buy that. And we just sort of repeat this cycle over and over and over. For most of us, most of the time, this is how we really invest. This is also why most of us, most of the time, are terrible investors. But you do not have to be a terrible investor. You can be way above average. It's just not that hard. Here's what's hard about investing. Getting together that first money to begin investing. So, how do you do that? I have a couple of other videos out there you might want to check out if you haven't already. One is called What is Rich? Another is called Saving and Spending. I don't want to repeat everything I said in those other videos in this video, but if you want to get together that first money to begin investing, you either have to increase the amount of money or wealth coming into your life and or decrease the amount of money and wealth going out of your life. There really is no other way. That's what's hard about investing, getting the first money to begin investing. What's easy about investing? Making $1 million. I'm not kidding. If you start with a $10 million investment portfolio, it's relatively easy to eventually earn another $1 million. It may take you a while, but if you pay attention to the other videos in this series and the other videos on my channel, you'll know how to do it. In this video, we learn more about how to invest. Specifically, we learn more about what the point of investing is. How good is the average person at investing? And what is hard about investing and what is easy about investing? This video is the first part of a 6-part series of videos on how to be a better investor. If you want to learn more, be sure to check out my other videos in this series and my other videos on many other topics. Until the next video, always remember that you are the best person in the world to decide what is important in your life. Thank you for watching. Please click the button to subscribe. I hope that you got something from this video. If you did, please give it a thumbs up and comment. Please check out my channel, playlists, and other videos. Have a great day.